was very interesting. So we move to the next panel, and this is a panel on emerging technology in enabling financial services, moderated by Hitesh Sachdev. He's head startup engagement, innovation, and investments, ICICI Bank. And the panel members are again, it's a studied panel. Mikhail Inani, Managing Director and Founder, Apollo Finvest. Arpit Ratan, co-founder, Sigdi. Ashwin Chawla, founder, Escrow-Pay. Rajesh Wadhwa, Chief Business Officer, M2P, YAP. And with this cutting edge technology, let's see as to how these fintech companies are, uh, you know, doing work today and how we can expect and what we can expect in the future. So over to Hitesh. If Hitesh has joined us, Hitesh was facing a slight problem in joining, or I would request uh, our head of PEVC committee, Ashit, to hold forth till the time Hitesh joins us. Hi, Arpit. Hi.
Hi, hi everyone.
Hi. Welcome,
Hi,
welcome.
hi
Thank you for
everyone.
being here. Rajesh,
Hi Sandeep. Hi
Nikhil,
Mikhail.
hi,
Hey Sandeep, hi.
hi, hi, hi. So, has Hitesh managed to join? Or Ashit, can I request you to come on till Hitesh joins us?
Hi, good evening. Good afternoon, everyone. I think I have to step in because Hitesh Sachdev is trying to log in and he's having some issues on getting on this new Zettle app. So I am going to try and spend some time till Hitesh comes on. If he doesn't come on, then I am going to try and moderate this session. I hope you all are prepared. I'm also expecting Rajesh Chawla to join in, Ashwin Chawla to join in, but it seems he's also finding a little challenging to come on the system. However, welcome all of you. Mikhail, Rajesh, Arpit, you all have been working in the space of digitization in one way or the other, either helping the companies to get digitized or giving them platforms to use the digital platforms which you all have made. So I'm going to make a quick introduction about all three of you. Arpit, to start with, Arpit is a co-founder at Scienzy. Scienzy has done a great work in digitizing most of the BFSI segments in from digital onboarding to various processes and APIs to make all the efforts simple for any customer who wants to onboard on any of the application of the bank, financial services, insurance, NBFCs, etc. That's a quick on Arpit. Coming to Mikhail. Mikhail has worked on a very beautiful platform, Apollo Finvest, which is offering a platform as an NBFC, which I had never thought and imagined that an NBFC can be available on a platform. And he has done a wonderful work by allowing most of the fintechs to use that platform and create the end-to-end journey for various processes which most of the banks NBFCs uses it very digitally. We have Mr. Rajesh from YAP M2P, which they have been creating the backends of the bank in a fashion in which nobody has seen. They do have many good customers and who have been raving about it. They continue to keep on enhancing the capabilities of the various banks, NBFCs, and insurance companies to digitize it, make it more frictionless, and allow them to onboard, do work very smoothly. Till Ashwin joins, I will try and articulate some thoughts here. Uh, the most important part here in today's term in this new age frictionless digital economy is how a customer gets a very good experience when the processes of banks, NBFCs, and various other players into the BFSI are creating a much smoother experience than what was happening in the past. Many times we have seen that if anybody wants to open a new bank account or wants to avail a loan or wants to avail any other services like insurance or a point of sale services, which was a little challenging because to get all the services in place, it was taking a lot of time. However, most of these players on the stage today have managed to digitize those processes, bring the friction very low, and make the customer a very delightful experience. So I'm going to request Arpit to just share his thought, his journey about how he has managed or his company has managed to digitize some of the processes. While we understand that a lot of banks and NBFCs and insurance companies needs to still further digitize and make it more frictionless. But I will allow him to share, and then same with Mikhail, and then with Rajesh while Ashwin joins us. Over to you, Arpit.
Thanks, Ashit, and thank you to Bombay Chambers for inviting us to the panel and setting up such an interesting discussion. I think one thing is quite evident, and which was not earlier, was who's going to win in the finance game. While it came to cabs, it came to e-commerce, the writing was always on the wall that customer experience will dominate the entire segment. But this was not very clear actually when we started 6 years back. You had risk guys who were, saying risk is most important in finance. There were others who were saying that banking is more important. And but what has happened, I think, and I think the way world has changed in the last 6 years, and I'm very young myself, but the way world has changed is that customer experience has now become the number one factor for financial services as well, and that's a very welcome change in the way people are talking about it. Believe me, 6 years back, we did not have panels of customer experience for financial services. You had panels for risk, you had panels for data types, you had panels for fraud, but no one was talking about customer experience. So I think a lot of fintechs have come in. I think it started with likes of Paytm, and I think they will have to be credited for what they did. They were the first one in the space who pushed banks back in their own game, and then made everyone realize that this is not just about having 10,000 branches. This is also about the kind of experience you can give to your end customer. So I think they really change it, and from there, I think there's no looking back. Today, of course, every segment of financial services, whether it's onboarding, something we do, or even as you keep moving on, service layers, payment layers, lending layers, I think everything has become about customer experience. And I think the more technology companies like ourselves, like Mikhail's, like Rajesh, as we start entering, you will see that banks will start giving up their space to pure-bred technology companies. And this fight, which was not so clear, is very evident now. I think now it's clearly about who builds that experience. I think that whole debate is kind of ended, and we are contributing to customer experience, of course, but seen a lot of good transformation in Indian fintech and looking forward. And I think we've all just reached a stage where we say this is day zero, and I think this is the start for all of us.
Thank you, Arpit. We'll move to Rajesh. Can you share your experience, please?
Sure, Ashad, and thank you for inviting us. Thanks to Bombay Chamber. One of the changes that we have seen over the last few years is the emerging demand from millennials and the world moving towards a quick service kind of a scenario across all segments, whether it's food or financial services. The emergence of players like Zomato and a few others has proven that everyone is kind of in a hurry and they want something instantly. We've seen how banking has changed. To my say father-in-law who's 70 plus, going to a bank, going to the branch, waiting there 5 10 minutes to encash his self check is an experience, and he loves to do that. But whereas for my daughter who's probably 21, she is very happy to use the app and transfer money and do whatever she has to do for the bank, and she's never visited the branch except once for opening the account. And today, as we work in the fintech world, we see that we've been able to further enhance that process where you don't really need to even go to the branch to open the account, to sign a few papers, and everything is fully electronic, digital. People are wanting to get that service now immediately at the doorstep or at their fingertips, and that's the changing phenomenon. That's the changing nature of how services are being offered, and that's the basis for frictionless and digital service delivery in financial services today. And banks are slowly kind of moving towards that, either by themselves or working in collaboration with fintechs, and quite a few of them with whom we currently work. And we've seen adoption across the segment. And the interesting part is, while ideally this is targeted to the millennial
Hello.
crowd, a lot of
Yeah,
the
Hitesh, we can hear you.
hi Hitesh. A lot of the young adults in the 25 to 50 age have quickly adopted the new paradigm and have moved forward with where they were to how the digital economy is working.
Oh, thank you. I think we have our moderator Hitesh on the stage now. I was just acting moderator in the meantime, and we also have Rajesh on the stage now. So I am going to go backstage and over to you, Hitesh, to take over this moderation.
Thanks, Ashit, and my apologies for all the harakiri which you had to go through. Please bear with me. I hope I am audible and I'm visible.
Yeah, you are
Yes,
absolutely
yes,
audible.
yes.
Yes, you
Absolutely
are.
audible.
Yes.
I hope
So
this doesn't
while you
get into.
came, I set the stage for you for how this digitization and frictionless world is happening. So we were about to hear Mikhail. I'm happy to hear Mikhail, and then I'll go on backstage. In any case, I'll be hearing, and then over to you, Hitesh, to take over from there because Rajesh will, Ashwin will have to give his introduction, and then you can start your Q&A.
Sure.
Thank you.
Awesome. Thanks. Thanks so much, Ashit, for giving me the stage. So I think, firstly, I think, companies like a Scienzy, M2P, obviously Escopay, all of these guys, right? Like, I think pretty much I would say, this is the infrastructure of the future, right? Like in one simple line, like over the next 10 years, what we're going to be seeing is a massive democratization of financial services, right? Whether it's lending, whether it's, mutual funds, whether it's investments, anything like that, right? And all of that democratization is going to be happening on companies like this, right? And just like AWS is today for apps, basically, right? Like all of these companies here today are basically the AWS for different kinds of financial services in the future, right? Similarly, like, I think, Rajesh mentioned about post offices, right? Like at least my thought process on bank branches is pretty clear. I think like over the next 10 years, they're going to be like exactly like post offices. None of us are going to be at least going there willingly, right? So to me, like that thought process is extremely clear. I think what Rajesh mentioned about his children, being 21, never wanting to go to bank branches anymore. I think that is pretty much India between the age of say 20 to 40, right? If not even below 20, right? And that's the majority part of India. That's the expectation, and that's what we all have to kind of live up to. Fundamentally for us as well, right? I think from an Apollo perspective, largely in one simple line, we think of ourselves as the AWS of digital lending. So our focus is to democratize basically lending. And the reason we want to do that is pretty simple because, financial inclusion is basically like not present in India, right? Like 95% of India doesn't have access to formal credit. And it is because, basically credit is limited to a limited set of companies and 10,000 NBFC licenses in India who are going out and giving credit. We feel like pretty much every company with massive distribution and transactions happening inside it, like a Zomato, Swiggy, Ola, Uber, Amazon, Flipkart, whoever you think of, right? They're going to be basically lenders or distributors or financial services in the future. You can call them neobanks, you can call them whatever you want to, but basically, like they're all going to be offering all of these services, to their end customers. It will be their, customers who are buying stuff from them, or it may be their merchants, whoever. And it's only when all of these companies end up starting to distribute financial services that's where we'll reach a point of financial inclusion, because obviously the cost of customer acquisition, etc., for them is absolutely zero. So to us, that's the most interesting part, right? And one of the big focus areas for Apollo obviously is to reduce the time that it takes for any company to basically start lending, right? When we started, it used to take us like 2 to 3 weeks. Today we've gone it down to 48 hours. Now the mission is pretty simple: get it down to a matter of like 2 to 3 hours. And companies like Scienzy, M2P, obviously, they're our friends because they help us do exactly that and enable all of these fintechs that we work with to keep reducing the time it takes them to basically get kick started and go live and attack this problem head on.
Thank you. Just before Hitesh, you take over, we'll request Ashwin to bring his thoughts on, and then I'll just quickly introduce you, Hitesh, and then you're on. Ashwin, can you share your thoughts, please?
Yes, good evening to all panelists, and it's a pleasure to be here. So we believe that, just as a background, we are a digital escrow company in the country, and we believe that our endeavor was to actually bring down the time for setting up escrows within minutes as compared to currently also it takes weeks to actually set up. And digitization at every level is actually helping the process of issuance of digital escrows. And I believe personally that India as a country, as whether it is lending, whether it is the other forms of financial services, stock investing, by integrating technology into the process, I mean, there are no limits to how far the business can grow. And we have been doing that for over 6 years now. And we have and today I'll be making another announcement, as part of the on this forum, on this good forum that I am available at, on a new launch. So looking forward to this session, and great to be connected to everybody.
Thank you very much. So, may I quickly introduce Hitesh? Hitesh has been part of the ICICI Bank innovation, but he is no less. He has seen so many companies, many of on this panel also, he has seen them from a very different lens. He looks at in a very detailed manner the capability of the company, helps them to take to the next level. My experience with him has been very, very good over a period of time. So, with that short introduction, Hitesh, over to you. You're on mute, Hitesh.
Thanks,
Hitesh,
Asif.
you're on mute.
Kind
Yeah.
introduction. Good evening, friends. It gives me immense pleasure to be amongst all of you, and we have a very exciting topic, uh, which is leveraging, technology, in enabling the financial services. So, and all the panel members are eminent industry experts. So I'm sure this is going to be exciting. So let me, kickstart this discussion by, posing the, first question to you, Ashwin. Uh, what is the right approach, while leveraging, technology in innovation? So is it kind of that you think about a problem first and then go and scout for relevant technology solution, or it's other way around where you have a particular technology and then you find use cases of those technology, and map it with the, problems which exist, and I would keep it contextual to financial services. So, what is your take on that, Ashwin?
Great question, Hitesh. I believe that technology and evolving customer demands are having actually a dramatic effect on the way today's businesses operate, especially for BFSI. It actually starts with imagining popular financial products and then studying the pain point that users face. Technology is actually nothing else but a wraparound of ease and convenience for users. And today's customers have reduced attention span, as we all know, a limited time for everyone. So they are willing to pay more if the service is good and it's frictionless and seamless in terms of the usage. So we picked up a huge pain point ourselves, of opening the escrow accounts by banks, which takes nearly 8 to 10 weeks on an average, and is completely manually driven, when it comes to documentation. So today we offer technology innovation where we open digital escrow accounts in seconds. So for me, I think it starts with imagining digital financial products and then building newer technology to implement, which is actually fascinating for users.
Yeah. Thanks, Ashwin. Uh, I think, our experience also that it works both ways. I mean, at times you have problem statements which you discuss with your, tech friends, tech entrepreneurs, and they are able to sometimes, figure out a solution for you, and it vice versa also, where you kind of
Absolutely.
in technology and, find appropriate use cases, though it may be used in some other field, but you can always borrow and, see if it can be applied to your own business, right? So with that thought, Rajesh, I have a question for you. That most of the times, banks or financial institutions, they try to innovate, and one of the way to innovate is working with, let's say, startups, partner with startups and fintechs. uh, uh, and at times, there are some ideas which are at, let's say, seed stage, or you don't know the outcome of those ideas. So, what, according to you, what should be the right framework, right, to one, to seed those ideas and commercialize it, and also right approach to partner with startups and fintechs?
Um, I think it's most relevant with the current scenario as we see in this market. To start with, like you rightly said, identify the problem, speak to your tech entrepreneurs, speak to your friends in the technology team, and see how you can solve it internally. Many times, banks or financial services companies have their own talent, and they have decently good talent. They have the right resources, but to be able to generate something which is scalable, to be able to deliver something that can bring value and deliver value, you might and ideally would want to collaborate with fintechs, collaborate with your partners. The best approach, as I see it, is to identify the challenge, define an approach along with the partners, create a sandbox, try it out with a smaller target audience, and see what the immediate outcome is. Post that, work with the regulator or the ecosystem, work with your target audience, create a commercial structure that works very well. In fact, we've seen this, and we work very closely with quite a few digital lenders, and we also work with NBFCs on the back end, like Mikhil mentioned. We do a lot of work with them. Most of our digital lenders started off with solving a problem of access to credit. And when one or two of them were able to crack the model, they're able to understand what is the right approach to risk management, right approach to underwriting. They have scaled it up so well in the last 3 to 4 years, starting with a nominal maybe 10, 12 loans in the first few weeks, going up to a few thousand loans in the current state as we are today on a daily basis. And this is expanded both in terms of number of transactions, number of dispersals, as well as value terms. And how did this happen? And to your question, is because there was a collaboration between the technology play, the ecosystem, and the bank who's ready to support, and they've been able to create something that addresses the genuine problem and create value for all the partners in the ecosystem.
No, I think good points. Rajesh, I think mindset of partnership, and also creating sandbox environment, and couple of other things which we have seen is working with accelerators, incubators, or you also mentioned about creating sandbox environment. So while there is a regulatory sandbox environment available with the regulators, some of the financial institutions have set up their own sandbox environment as well. So taking a cue from that, you know I would say, Arpit, I would pose a question to you that we have seen the digital adoption accelerating in past couple of months, and thanks to COVID, right? Some things which are positive about COVID. We've seen rapid digitization, right? So but that also has posed a lot of risk in terms of cyber security, data privacy. So how, as in, what is your advice or your inputs to the financial institutions, bank and fintechs to address this challenge? How do you guard your digital properties, your consumers, with the from the cyber security concerns?
Yeah, no, Hitesh, I think you're absolutely right. That is emerging one of the key concerns, especially when you're digitizing. I think, and why this concern is that when data volume is flowing in the speed, as Rajesh said, right, 1,000 loans a day, there is absolutely no scope for human intervention. There's absolutely no scope for any human checks. So, which means everything needs to be automated, including infosec. One of the challenges for infosec, which they have overcome actually, is that it's traditionally been very human driven, and I think very easy way to solve is money and time. I think both of which people don't want to spend, and we have done a lot of these projects with banks, with fintechs. I think a bank will spend a month thinking about how this color should be, but when it comes to a infosec check, they'll say it should happen in 2 weeks. And And that's everywhere, right? Everyone thinks of infosec as this one tick box key, someone else's problem. So I think that needs to change, right? You need to give time to your infosec team to manage it, and they are generally underinvested. And the second is, of course, money, right? We work with so many people. They look at infosec as just as a tick box, right? You will go for the cheapest VAPT test. I mean, it's not even a joke. People don't even discuss as to should we go for a higher? Is there a better feature, better quality? No, it's very simple decision. If there is needs to be a tick box ISO certificate for a particular build, everyone is kind of in consensus it should be the cheapest. And I think both time and money are two variables. Seems like now, and we will eventually go to Europe and US way in this.
Got it. Yeah, I think it's always better to get your systems processes audited from the infosec angle. Uh, do dipstick on a regular basis, right? Some of the stuff which we try to do it on ongoing basis. So I would now go to Michael, and this is, I think, a question which keeps coming up, very frequently across all the panels and all the discussions, that COVID-19 has had a larger impact across businesses, economies, in the world, and BFSI segment as a has also gone through the challenges posed by COVID-19, right? So my question to you is that how one prepares, right? And we are still in the middle of the crisis, I would say. Uh, uh, how do as an financial institution or a bank or a fintech startup, prepare for to kind of leverage, and to kind of see that the COVID impact is minimalized on the business?
I think, firstly, honestly, in my opinion, at least, COVID is just, specifically when it comes to, BFSI as an example, it's just pushed everything forward by 5 years, right? Like, it's now basically, I think, anybody who's trying to fight it, right, and trying to continue, doing things the old way is fighting a losing battle. I think step number one is to accept that, now more than ever, you have to do things digitally. Yes, everybody was comfortable doing things, the old way. But if you try to continue doing that, basically it's going to go very badly, because neither customers want to do anything which, doesn't, which basically involves them socially interacting with somebody. Neither do, I'm sure, banks and NBFCs, the employees of those companies want to basically put their health at risk and, do anything physically, right? So I think what every person in the financial services space should take this opportunity as is to really double down on technology, right? So now is basically a time where apart from these are wonderful conferences and boardrooms, I think now it's actually really time to put where your money where your mouth is really, right, and double down on technology, right? And I think the good news for all banks and BFCs out there, right, the large ones, is that you guys have the capital. You're yet on top in many ways, right? I think it's not like the boat has passed you by, right? Like it's really like we have stories from the past which tells what happens when boats pass you by. There are so many stories out there, but it's never too late. It's yet day zero. So I feel like all of these banks and NBFCs, right, they should in fact take this as a great opportunity to literally double down and just be like, what, we're going to basically become and embrace the technology DNA of our company. If we don't have a technology DNA, then we need to grow one, right? And this means infusion of talent, and this means infusion of talent at a CXO level, right? Because a lot of people always ask me this question, right? How do you become a tech NBFC? How do you become a tech bank? I think it's pretty simple, right? I think number one thing you have to do is hire top level talent right at the CXO level, because then that's when things will move, right? Otherwise, if you just hire people, they may be great team members, but they are finally just if they're lower or middle level team members, they just can't influence change, right? So you really have to change the DNA of the company, and that has to come from the CXO level.
Can't agree anymore. I think it's all about changing the culture, getting your. Obviously, it can start from the CXO level, but it has to percolate down the last, employee in the organization. Where how do you, the way people are physically fit, how do you make them digitally fit, right? And digitally fit is more important in the current context. And I think the COVID has helped us to propel some of the initiatives, be it virtual banking, be it digital operations. I think, and this has helped not only reaching out to certain set of customers which were otherwise not able to reach out, but it also helped us in reducing the cost part of it, right? So so building on that point, Rajesh, I think the critical part here is the manpower and the talent, right? I mean, so imbibe and to embed lot of the digital and tech stuff in your businesses. I think it's sort of all about getting right set of people. uh, so what is your take in terms of one, attracting right talent, and second, managing that talent, because that will become a backbone for all your tech transformation or digital transformation.
Sure. So what we currently do and what we've seen is an industry practice too, is to, like Nikhil rightly said, attract the right talent and get the right people at the CXO level. But more than that, it's about looking for people who have the right attitude, who are able to quickly adapt and learn. Second, to partner with people in the ecosystem. For example, we do a lot of work with regtech companies like Scienzy with Arpit, where they bring in the innovation, they bring in the people who have done this a few times and continue to collaborate with us to co-create something new. And once we co-create, there are a bunch of kind of people who want to be as a known to be as a part of the pioneers who built this and kind of a pioneering solution that is accepted and run in the world. We've done some exciting work in areas like lending, digital lending. There we worked with teams who have come to us from traditional payment solutions companies. And what do we provide them is a free platform for them to try out a bunch of new initiatives, question their traditional way of thinking, and see how we can reduce time to market. For example, to onboard a customer to be able to issue, let's say, a credit card, if you're lending on a credit card, which used to take earlier between 6 to 7 days, and it was probably brought down to 3 4 days by some of the banks. We have now brought it down to 3.5 minutes. And there we rely on a lot of engineering efforts internally, plus a lot of support from partners like Scienzy, where we automate the whole registration process and KYC, etc. So this kind of a change has, like I said earlier, ensured that we're able to service like a quick service restaurant, offer financial services immediately, plus give that excitement or that the juice of creativity to the team who understand payment solutions and who are able to add that layer of building something different, something pioneering, which solves the problem currently. And post that, it's all about giving them new challenges, new kick, and that's how we kind of retrain and retain talent.
Yeah, no, aptly described. I have another, emerging trend to discuss with, Mikhil, you, because, you are into the, you're at the front of the, lending, you're driving, lending business revolution from the, front. So, embedded finance is now, becoming the new trend, and it is converting, almost every business into a fintech, right? I mean, and we are seeing that payroll providers are started providing financing now. E-com companies are providing financing on their platform. So you know what is your take in the businesses to adopt embedded finance, and also banking as a a service model, right?
No, definitely. I think, I think embedded finance, I think honestly is inevitable, right? From my perspective, basically, I think you mentioned HRMS companies, I think e-commerce companies. I think fundamentally, if I had to just give you a simple example, right? I think, what's going to end up happening, and I'll talk about maybe a company which is, on everybody's lips right now, basically Zomato, right? Like, I think, it's inevitable that, anytime soon, if they're not now, they're going to basically start lending to restaurants, right? They basically control the number of orders which come into restaurants. They basically control and understand and have visibility into, what are the orders that they're going to be getting in the future. They have basically visibility both on ability to pay and as well as intent to pay, right? And when that happens, essentially, fundamentally being a listed company now more than ever, they need to make sure their revenues are up and to the right. And for that, essentially, they need to supercharge the growth of all of these, I would say top 20% restaurants on their platform, right? So from that perspective, they have no option but to come in and become the growth, supplier, or you want to call them basically providing growth infrastructure to the best providers and best restaurants on their platform, right? Because if they don't, ultimately Zomato's revenue is not going to go up, right? Because it follows the Pareto principle where the best guys are, basically contributing 80% of the revenue. So when this basically happens, right, you can take this example and take it across Flipkart, Amazon, Uber, Ola, whoever really, right? Any company which honestly has transactions going through it, everybody is going to do this, right? Because fundamentally, this is going to be basic table stakes, right? In order for you to do this, like before this, I was the co-founder at PharmEasy, and we literally raised hundreds of millions of dollars. But it was a funny joke at that point in time because our pharmacies at that point in time, right, they were struggling for working capital loans, right? And we had to actually go out to our friends and family and ask for like 10, 20 lakh rupee loans for pharmacies. And all of them looked at us very, very strangely because imagine reading in the newspaper that this, guy has raised $100 million, but he's asking for a 15 lakh rupee loan from me. Imagine the weird stares you get, right? So I think that is a problem which is there for every single platform out there today, and it is going to be solved by, you want to call it embedded lending, I call it inevitable. Like over the next 10 years, every single company which has transactions flowing through it is going to basically start doing some form of lending or the other. And it will not be lending like, lending is done today by banks and NBFCs, like primarily banks and NBFCs, and rightly so. They focus on NIMs, right? But when Zomato, Ola, Uber, Zomato, Amazon, all of these guys get into lending, it will be to supercharge the growth on their platform, right? It will be less about NIMs because they have like, shit ton of supply of, capital at their end, right? So that's point number one, right? When you talk about banking as a service, again, I think honestly that's a move which most banks and NBFCs should strongly consider. I mean, I am biased because Apollo is literally that, right? Where NBFC is a service in a way, but I think it's a move which is inevitable because ultimately what happens, right? All of these platforms already have access to millions and millions of users, and these users love these platforms, right? They love using an Ola, they love using an Uber, Amazon, Apple, Google. They love using these services, so it's inevitable that they'll want financial services also from them. There are examples out in the world, right, where obviously Goldman has partnered with Apple to create the Apple Card. Google, there are rumors out there that Google is creating, almost like a neo bank offering debit cards and all of these things in the US. This is going to continue as a trend. So where does, a bank or an NBFC see themselves, right? It's very important that you recognize where you're going to be like in 20 years from now. And I think what is going to end up happening is you have to really create a world-class stack to become like a really good banking stack, right? From a technology perspective, because table stakes in the next 5 years is going to be that, a Zomato or a Ola or an Uber or an Apple is just going to go to banks and NBFCs and talk to them that, hey, we want to do this. We have the customers, we have all of the data. We just need like a regulated entity which has world-class tech to handle our scale. And are you that person, right? And the answer is no. They'll walk away to another guy. So I think banking as a service is something which, if I was a CXO at any of these large banks, I would definitely put a lot of energy and time into this as an exercise and really create a world-class scalable platform and become the de facto choice. And again, it's almost like I'm wishing a competitor into life by me saying this. But this is what we are doing. I always recommend the same thing to all my banking friends as well. I think you guys should do this definitely.
No, I think embedded finance is all about offering that seamless experience while you are on a particular platform. If the customer is more interested to avail that service, and the finance is not the main thing one is looking for, right? It's a means to achieve an end objective, to do a transaction or to avail some service or some product on the platform on which you are transacting. So yeah, embedded finance does bring in a lot of one seamless experience for the customer. Second, I think very important point you mentioned is about the ability of those platforms to uh, analyze the customers in a different way because of the kind of data they have. You mentioned about Zomato having data about restaurants. I think traditional lenders might not have this data, while Zomato is able to look at this data on a daily basis, right? In terms of how much sales are happening, what kind of sales are happening. So that brings in a lot of richness of data, which is more recent and which is more cash flow, oriented data. So I think those are important pillars, in the embedded finance. So on this point, Arpit, you know how do we, data is a important aspect, right? Be it be it, is it a payment data, it's or lending or anything, right? Where and people who own this data, kind of have a better advantage vis-a-vis, people who don't own this data.
We lost Hitesh, right?
Hitesh, we can't hear
We
you.
can't hear you.
Am I audible? Hello.
Yeah,
Yeah,
yeah.
yeah,
Hey, sorry, yeah, sorry, guys. So I'm saying that today, account aggregation, it will become a reality soon,
yeah.
and data sharing, will be democratized, and there would be a lot of efficiency in terms of the way we conduct our financial transactions, today. So Arpit, what is your take on account aggregation, changing the entire landscape in the finance industry in the financial services?
Yeah, no, no, absolutely, Hitesh, you're absolutely right. In fact, we see it in two ways. One is very short term, and one is long term. I think short term, it's a more cost optimization or efficiency measure. I think banks are using a set of data. How account aggregators will help it. It will make it cheaper. So you'll and it will become very simple. The way I think Aadhaar did for KYC, right? I'm not that banks did not do KYC earlier. So a part of it is that banks are going to see better data. They're going to see easier data. So verification, validation, which is also cost in a way of fraud. So in short term, it's efficiency and it is faster approvals cost. But I think in long term, what Nikhil was saying, right, and what Rajesh was also saying is that there are platforms which are producing a lot of data, right? Eventually, OCN will not be just about banks, right? Account aggregator framework was only banks, but OCN will be about the Zomato and will tell Zomato that this data belongs to the restaurant and not you, right? And eventually, the banks will say that when I can be asked to open up my data, why not Amazon open up data on sellers? Why not Zomato open up data? And I think in long term, that will be very beautiful for the entire lending industry because you will not only have banking data, which honestly was there traditionally always, maybe not well structured, but was always there. But you will have these new data sets which are now never there in the system, maybe other than the manufacturer like a Zomato. And I will be able to underwrite a seller not just on bank data, but on some Zomato data. That same seller may also be on an ERP. I will take that data. Then same seller may also be doing something else, like selling some fruits or whatever. I'm just making this up, by the way. But so eventually, you will see that on this seller, other than just transaction data, I have so much data coming from so many different systems, and all are verified. By the way, all come to me on a click of a button or a click of authentication, and that I think will blow up, right? Once we reach that point, and we are right as I think we're the only country in the world which is even attempting to do this, right? So I think hats off to the government, hats off to Sahmati and all these guys who are behind it. But when we achieve that point, I think it will blow up, right? It will be first of its kind in the world where so much data on businesses, individuals will be available to underwrite over and top of financial data. And I think that will open up new models of underwriting, that will open up new businesses which can be built on top because I have so much data on the individual. And honestly, I'm not a person who has so much vision into lending. But I'm a technologist, I'm an innovator, and the one thing I can clearly see is that there has not been so much data available around businesses or individuals in the past in any country for that matter. And I think that will be beautiful for the entire lending industry in the years to come.
Yeah, I think the other aspect to one is to kind of always look for is that once this new sets of data is available, data is an oil, right? As we all say, new oil. But we also, all of us, need to build refineries to process that oil. and see that we take the relevant data sets and make meaningful a meaningful analysis out of it and use it to offer various products to our consumers. So building on that, Ashwin, uh, uh, while we've been kind of talking about a lot of new technologies, new innovations, but the moot point is that how do we make these innovations affordable and accessible to the large set of masses of customers, right? That would be the key thing while we drive our innovation agenda.
No, absolutely. In fact, to add to what Nikhil and Arpit said regarding data, and of course the power of technology. So just to give you an idea, State Bank of India, it took 10 years for them to grow their home loan book from 89,000 crore to 500,000 crore. And over the next 5 years, they plan to double that up with the usage of technology to 10 lakh crore. So as far as tech is concerned, it is, if it is unaffordable, then it is waste of time and energy. And keeping business costs down, not only while innovating or building, I believe that it is pretty important to also keep every cost in mind, so that the traction or usability increases at some point of time. Just to give you an idea of how not only the technology can be cheaper, affordable for users, but also how the technology can help open other monetization channels. So, just for an example, and I found this interesting use case in Kenya, I thought of sharing it with everybody here. So, there's a company in Kenya called M-Pesa, a mobile payment solution, right? And this is greatly needed in a country like Africa, because 80% of people don't have a bank account, right? But roughly 82% of people have mobile phones. So what's even more exciting is that M-Pesa has become the source of the business and ideas in other sectors as well. So one of the M-Pesa's founders launched a product called M-Kosa. So M-Kosa actually is a home solar solution in a box. It has rooftop panel, 3 LED light bulbs, solar radio, and cell phone charger. It costs roughly about $200. So how they plan to sell that and make it more affordable is that they went into the market, people who can't afford $200 product. So they said, please sign up for an initial deposit of just $30, and the rest can come as a micro payment of 50 cents a day. And in 365 days, the micro payments, you own that product that can be set up and start receiving clean and free energy, for your home forever. So considering innovations, we believe that there has to be newer ways, newer versions of keeping the costs low, allowing people to start using your services. And then obviously the modifications, feedback, you keep on iterating. As founders, we built our business on feedback. It has taken us a lot of time, but feedback is critical, right? Feedback, as they say, is golden. And for us at Escrope, we work with a small team, innovating ideas every day, keeping prices affordable, creating products that are agnostic of industry, size of transaction, bank account that one is using, age of the user, or the ability to use technology. So today from this forum, we are releasing by far our biggest innovation today, and very happy to announce that we are starting issuing digital escrows via WhatsApp from tomorrow. So this is never been done in the past. this is
Many,
going
many.
to be this is going to be the biggest change as we plan. And again, innovation. Even if you make apps, one can kind of delete those apps if it becomes unusable. WhatsApp would always remain. And that is the reason we thought of everybody says democratization. We thought of not making any app forever, but shift the issuance of digital escrows via WhatsApp. So tomorrow, and I'll share the number with you privately, you can of course start testing it. It's a beta release tomorrow, but we'll be more than happy to take it forward. So whether it is 390 people million India using WhatsApp, whether it is illiterate person or a scholar or a small business or a large enterprise, everybody uses WhatsApp. And we believe that this kind of penetration is great for our country, because the banks that are backing us at the back are the largest banks. The technology is robust, and people get a chance to explore the product, via WhatsApp.
I think many congratulations, Ashwin.
Thank you, Hitesh.
Very well articulated. How do we, good examples, M-Pesa, M-Kosa, and digital escrow through WhatsApp. That how innovations can be made affordable and accessible to masses. So, uh, you know, uh, picking up that thread, I would ask Rajesh. That Rajesh, today we see APIs, right, becoming the way of life, and any partnerships, I would say, the APIs are becoming backbones on the. In fact, the success metrics of the partnerships are now dependent on the quality of APIs and integrations you built in, right? Especially in the especially in the startups, fintech, and the bank. So, what is your take? While your suggestion or recommendation to people who are embarking on this journey, because you are at the front driving the API revolution in so what are your views?
So what we see is that since we are a API platform company and we've been offering APIs to enable banking as a service, to enable financial services as a for all the our fintech customers, we are seeing a lot of adoption. Plus, we are also seeing a lot of simplification. When I say adoption, there are new fintechs who are looking at launching their service, which could be lending, which could be travel and forex, which could be fleet and fastag, and all of these are their traditional businesses, but moving to a electronic medium, working with a bank, and we enable this because we have open APIs, because we have APIs that can make it like a game of Lego. You take pieces of Lego and build a tractor, build a building, and build whatever you want to. Second, what we are seeing is like you say, banking as a service. There is also network as a service today. While most of the generic banking services have converted into an API, and you can draw an API and start using it, you still need to connect to a physical infrastructure for a network like a Visa or a Mastercard, etc.
So, Hitesh, any new innovations from ICICI Bank?
Many more to discuss, but I think that, uh, I can see Arpit and
Nikhil is there.
yeah. Now I think we're getting back. Yeah.
Am I audible, visible?
Sorry,
Yes.
guys. I think there was some technical glitch. We are back on the stage now.
Yeah, Rajesh, am I audible, Rajesh?
Yeah,
Yes,
yeah.
yes, yes, yes,
You're,
yes.
Yeah, yeah.
we can hear
There
you.
was some
So,
technical glitch. So no,
yes.
I can you can continue Rajesh on the API
Yeah, so I was talking about being able to launch these services, the traditional services, using our platform and using the bank's card solution. Outside of this, there are a mix of APIs, and I'll draw an idea from what Advait was saying. The open APIs for OKIN, for account aggregator, and for KYC. Together with that is the banking APIs, and once you merge all of these, is a very powerful solution that you can use for launching new lending products. You can use for assessing whether your potential borrower has got the right background, the right capability, capacity to pay, intent to pay. Looking at how, what Michael had said earlier, all of these are the new technology API or the new age APIs that we currently offer, and we're seeing a proliferation of these across all the business units. And you can choose to mix a few pieces of Lego and create something for travel and forex companies, something for a digital lender, something for a HRMS player, something for a player who's doing something very unique. Like we work with one of the milk cooperatives. We work with one of the milk technology company where they're trying to digitize the whole payments flow from the farmer going up to the dairy farm, right? And this has become a reality today only because of availability of APIs, and only because of the new age technology that we currently use, offer, and of course collaboration from banks, and banks like ICICI and a few others.
So Rajesh, I think we kind of keep hearing about neobanks quite often, right? It's a mainstream word now, across, and we have seen emergence of neobanks on the individual consumer side, on the SME side, right? So and uh, the way the neobanks work is, on the back end there is a bank, right? So there is a very tight integration with the bank, and
Yeah.
the front end is managed by the neobank. So what is your take in terms of how do this, neobank one, reduce their product launch timelines and integration timelines? And second is that, what is your view, in terms of time frame the neobanks will become more mainstream?
So to answer your first question, I think the timelines for a new bank to launch a neo bank to work with, ideally if they work with partners like us, like Arpit, we can kind of enable all of these solutions to bring banking to the doorstep, to bring other financial services like wealth management, like insured, because we work with insure tech companies, we work with wealth management firms, we work with personal financial services firms, and these are the value adds, and these are the, so to say, the icing on the cake, as we see it. And this is our our view. Most neobanks in this region, while they continue to offer banking as a service, and the best part is India is fairly mature in terms of technology adoption for in the banking sector, unlike what you would see in Europe or in US, where they are relatively, if you have to send money, we have IMPS, we have NEFT, we have RTGS, which are like new age, and you can get the money at the other side in a few seconds or in an hour or so, which is not present today in the rest of the rest of the world. We work with quite a few countries, banks in the South Asia region, where even a UIDI equivalent or a NSDL or a PAN verification equivalent is not available today. So we are far ahead in terms of technology maturity in banking, and hence I don't think the use case of neobanks and the growth of neobanks will be based on just purely providing banking as a service. Where they would become really successful and scale up quickly by being able to offer those additional pieces like an insurtech, like wealth management, like personal financial services. Let me take an example. We work with one of our partners where we work with offering their insurtech as embedded into our service, where a person, a normal individual who's going abroad with a family of four, he needs to take an insurance for his international travel. This insurtech API offers him an option to choose the best insurer for personal accident because he's traveling internationally, choose the best insurer for baggage insurance, choose the best insurer for loss of critical documents, loss of cash, etc., and choose the best insurer who can also give him a return ticket, so to say. And all of these four could be different insurers, but all of these using an API are bought in small sachets, offered into one single cover note by this insurtech player. And this is something that's embedded into the neobank player who's offering, if you sign up with me, you get a bank account, plus you also get this wow insurance product. You also get a wow personal finance product where we'll help you open an account in a brokerage firm in the US, and you can potentially invest small quantities in a FANG stock. You can invest in the international mutual funds which track the FANG stock. And access to such financial services, access to opening an account like this has become so simple and easy, sitting in your house at your doorstep. and that's because of availability of APIs plus the add-on benefits that the new banks are bringing in, and hence we see those who offer these kind of additional add-ons over basic banking are the people who potentially grow over the next. If you ask me, it's at least about 4 to 5 years away. Over the next 4 to 5 years, you will see mushrooming of a good amount of neo banks of these. Those who offer these special services will scale up quickly.
Uh, you know, uh, Thanks, Rajesh. So, with this, Ashil bhai, if we have 5 more minutes, I have two more questions
No, we
for.
have 10 minutes. So we can go for 10 minutes and then after that we'll open for question answers.
Okay, okay. Thank you. So, the other new initiative, which is kind of initiated by regulator, and this is question. This is question for Miguel. You is the new umbrella entity in the retail payments. I think it's an attempt to encourage more private participation in building up the large retail payment ecosystem. So one, what is your wish list from this new umbrella entities getting formed? The couple of applications have been made. The licenses are yet to be awarded, but we can always preempt and put a wish list forward to them in terms of what is it that and here I would request you to wear the hat of a consumer, right? And tell us that what is your wish list from the new umbrella entities which will be licensed by regulator soon.
I think my wish list for most regulators is actually the same. Be very, very generous in handing out licenses, right? Because, like, I think this country basically requires 10x of everything, right? 10x of the number of NBFCs, 10x the number of banks, 10x the number of payment licenses, whatever you want to talk about. And I think I've heard a lot of arguments as to why that's not possible, and how do you kind of regulate everything. I mean, we're a population of 1.2 billion people. I think we can find more people that the regulators can hire to just regulate everything, right? See, as it is, just on a very macro level term, right? I think what happens is, as it is, India, like most countries, right, like innovation is followed by regulation. I mean, I experienced that firsthand at something like Farm Easy. When we started that, literally we were selling drugs online. The minute we used to say that, every regulator in the country used to stare at us, and give us like really, really ugly looks. Similar stuff is happening in the fintech world as well. Like, a lot of people feel like, oh my God, what is happening? How can so many fintech start blending? And what's happening? It's nothing, right? Basically, fundamentally, the goal everywhere is just democratization, right? That was about democratizing cheap, affordable healthcare. This is about, democratizing access to financial services. It needs to be done. I think, so in one simple line, I stick to what I said, right? I think the regulator across the board, we need to come to, we need to have the capability of handing out a lot more licenses. And at the same point in time, when you're handing out a lot more licenses, they need to come up with structures where they can manage so many entities who have so many licenses, right? Maybe that means hiring more people in the regulated entity like RBI, SBI, SEBI, all of these guys, right? Maybe they need more people to manage all of these, all of these entities that are getting these licenses. But ultimately, like, that needs to happen. It can't be like with, again, 3, 4, 5 forms. Maybe it's fine to start with. It's limited forms, maybe just as an experiment. But once they feel like things are working and it's going in the right direction, I think we need like a regulator who really pushes, on the agenda that, listen, if India is going to become like a country which has access to all of these amazing technologies, all of these amazing, financial services, then we need a lot more entities to have these licenses so that we can go out and, really deliver, I would say, proprietary, tailor-made solutions depending on who the customer is, right? If I'm wearing the customer's hat, if I'm like a retailer, I have very different requirements from a payment gateway, right? If I'm a, I'm a shopper, right? I have a very different requirement from the, payment gateway, right? Maybe I'm an e-commerce merchant. I would expect a little bit different stuff from a payment gateway. Allow, niche companies to exist by making, this, don't make this license Raj continue anymore, essentially, right? We need this capability where, the regulator is powerful enough to regulate all of these many licenses that it's handing out. But I think that's the long-term basically solution, which I would really wish for the entire country.
No, I think well said, Nikhil, and I think the uh, more and more in licenses would be given. More such ecosystems will get established. It will only expand the overall digital infrastructure in the country. It will also promote a lot of tailor-made or custom-made solutions for the certain segments, right, which are either to uncatered to. So it will also in a way promote financial inclusion. So yeah. So coming to the last question, and this is to each one of you. In maybe if you all of you can describe in Ashwin, I think already described about his exciting innovation which he is
Yes.
maybe and all of you if you can tell us what exciting stuff you are kind of working upon and plan to roll out, let's say in next 12 months, 6 to 12 months, and what is what is keeping you excited, right? So maybe two lines from each one of you would be helpful. Maybe we can start with Mikil and then Rajesh and then Arpit and Ashwin will go last for you.
Sure.
Yeah.
Sure. So, for me, I think the most exciting bit always remains the key KPI for us, right? Which is basically how quickly can we basically take a fintech live to do their very first loan on our platform, right? When we started, it used to take like 2 weeks. Today it's 48 hours. Like the biggest mission for us is now to convert that into 2 hours, right? If we can make that happen, in the next say 12 to 18 months, I'll be a very happy man. Everything else, will magically take care of itself. But this is like the most important thing.
Brilliant. So, drawing a leaf from you, Nikhil, we are working on two-pronged approach. One is exactly like you said, reduce the time to market. We're working with the networks to see if we can get pre-issued bins, which are certified and ready on our platform, so that we can take our programs live in less than 2.5 weeks. And that's one. And second is we are also known for uptime, agility, etc. So we are doing a bunch of initiatives around edge computing and cloud. We're looking at moving networks and our pieces into the cloud. So to start with, we've started the ACS, which is a key component, and we have kind of moved it to the cloud and enhanced see how we can enhance it in case of let's say $1 billion sale, right? The sale in Flipkart and Amazon. We call it billion a day, the bad project, where we had targeted to do about 10,000 TPS, and with our engineering efforts, we have brought it up to 41,000 TPS. We are now trying to do something similar, working with the networks and offer network as a service. And you don't need a box like a physical rack to connect to a Mastercard or Visa. It's currently in the works, but it's something that we're quite excited about.
Yeah. Yeah, Arpit.
Yeah, hi. So I think our exciting project is today we build onboarding journeys, and it's kind of we need to do it while we can do it. So we are a no-code platform. So I think what we want to achieve is allow the bank's non-IT teams to build end-to-end journeys, right from app to back office. So I mean, a digital team in a bank thinks of an idea that we want to digitize our housing loans. Like they don't need to come to us. We give them a platform like WordPress, and you just go there, put your journeys together, and in a day, by end of the day, you have an end-to-end onboarding journey ready. So I think next 12 months we want to achieve that. We're already doing it internally this way, but we want our customers to experience this platform themselves without even needing to come to us at all.
Yep. And now over to you, Ashwin.
Well, we have a product called Invoice to Cash, which is dynamic invoice discounting, and we've added a layer of escrow in it. And looking at the response, the phenomenal response that we have, and the ROI that the clients are getting by paying supplier invoices early, is phenomenal. And we plan to add ML, AI, and we strongly believe that the digital innovation is the future. And more we make it frictionless for users, more new markets would open, for a country like us. And we continue to innovate for helping our clients. Thank you.
Oh, Thanks. I think this was very exciting discussion, and I have many takeaways and learnings, and I'm sure all the participants also would have found it very enriching discussion. Uh, I would like to thank all the panel members for their sharing their views, knowledge, and wisdom. And uh, I think with that I will conclude the panel discussion. We can open up, for we are open for now Q&A. And thank you once again.
Thanks, Hitesh. Anybody who has any questions can put in the chat box. And in case we have next 5 minutes available to do the Q&A, and after that, we'll request Pinky Mehta to come and propose a vote of thanks. Hitesh, if you are able to see any questions in the chat box on your side, if you can, there's a one icon on the top called chat. If you click
Not
that,
yet.
well,
Yeah, not yet.
no problems. I think in this session itself was so good that most of the questions have been very elegantly answered. The people have been able to articulate it so well. It has allowed the audience to digest all the answers which has been given by this August panel. I'm really grateful for all of you participating here on the panel, as well as all who have attended. It seems that we don't have any questions coming on, so we can go back to the stage on the backstage. If you can take us to the backstage, please.
Thank you. Thanks, everyone. Thanks,
Thank you.
guys.
Thank you.
Thank you.
Bye.
Thank you. Thank you, everyone.
Yes, Sandeep.
Thank you. Actually, there are questions. If you go to the chat and go to the Q&A, there are some questions there.
I think we are unable to look at it. That's the problem. So I think there's a technical glitch. So
No,
we will
no
take it
issue.
up. We'll take it
What
up
we'll
separately.
Sure, we'll take it up separately, and what we'll do is that we will have send it to our panelists, have them answer and send back to the people who have asked these questions. Uh, so we're still waiting for Anjali. She's unable to join. I think she will do this tomorrow.
Anjali, Pinky, right?
Sorry, Pinky. And I think we have a two-day session, so Pinky is
Okay.
unable to join right now. So Pinky will
Okay,
join us
okay.
tomorrow.
Then I will propose a vote of thanks
Yeah,
on behalf
please
of
go ahead.
the chamber. I would like to thank our all the participants. I would like to thank all the panelists. I would like to thank the Bombay Chamber and the team who has been diligently working on this to create this conclave. And would like to thank all the sponsors, Kotak Mahindra, Tata Investments, Cosmic Mandala 15, and NICHEM for their wholehearted support for making this a successful day one offering by Bombay Chamber of Commerce and Industries. This conclave has given us a lot of thought. The first panel, led by Anjali and Nilesh Shah, gave us an idea about how the banking is moving and how it is bringing the digitization and the traditional banking together to make it happen and to go to the next level. And the next panel, which was led by Hitesh from ICICI Bank with the four panelists, gave us the idea that how they are powering the digitization and frictionless and delightful customer experience, which has been getting built at the back end very smartly, very nicely, but not coming in the front like how the banks are today. On various services, the banks, NBFCs, insurance companies are riding, which has given us a lot of key takeaways that how the transformation in this country, which is happening though silently but robustly, is going to change our lives on a day-to-day basis. With that, I would like to thank all of you and would look forward to see you all tomorrow again for the next day of the panel. Thank you very much.
Thank you, Ashit. Thank you for filling in and for the vote of thanks. See you tomorrow.
Bye.
Bye bye.